Welcome back to this tutorial on financial modeling using Kaluta projection methodology. In this tutorial, we are going to establish the amount of capital that is needed to be injected in this business so that it can operate smoothly. Before we do that, we need to add two important cost elements that I have overlooked, and because these ones don't need any workings, so we will feed them directly in the P&L sheet and then in the cash flow sheet. So I'm clicking on the P&L sheet here to open it, and then I will add them below auditor's fees here. So I am selecting two rows in order to add insert two rows. So go to the insert menu on top and then insert rows, and here I double tap to write stationaries and sundry expenses. Sundry expenses. Stationaries are important. These two elements are important for any business. You need stationaries, of course, in any business, and sundry expenses for those small expenses or unusual expenses that you cannot account them here, or even this figure sundry expenses is used as a backup figure. Just in case you have overlooked, for example, I have overlooked stationery here. So if I had sundry expenses, then that could be covered from the sundry expenses. So I'm adding them. All of these will happen in March because there is where we start normal operations. All staff have been employed to start working. So let's say the stationaries for the month is 50,000 Tanzanian shillings. And then sundry expenses, say 80,000 Tanzanian shillings. Okay. And I need to copy this formula here because it has computations for adjustment for inflation. Okay. So I'm just dragging this. I tap to fill this to cover these two elements that I have added here, and select these two items here, and then fill them to the rest of the projection horizon. Okay, so we are done on profit and loss side, and let's go to cash flow side now. I click on the cash flow sheet. Again, I'm adding two rows, inserting two rows above auditor's fees, and I can go back to P&L sheet here, select these two particulars, copy them, go back to cash flow sheet and paste them there. So tap to paste. Okay. Here I cannot drag auditor's fee formula because it has picked from the working sheet, as you can see in the formula bar. But for transport, this one is from P&L. Okay. But of course, definitely I cannot drag it from January because here we do not have projections for inflation. So the best way would be to click here on the stationaries and then double tap, put a formula, and then go back to P&L and pick the figure for stationaries for January. Yeah. Okay. But because stationaries draws out cash from the business, we need to start first with a negative number. So let me overwrite, remove this first. Remove this, start with the negative number, and then click on stationaries here, and then press enter. So this formula, I can just fill this one to cover stationery because these two items are adjusted. I mean they are next to one another in profit and loss. So I can simply copy the formula I used in stationaries to sundry expenses too. So after copying it, and then I fill this to cover the rest of projection period. So after doing that, we have debited in profit and loss and credited in cash, so our balance sheet should balance. As you can see, the check is 0 there. Okay, so it is balanced. Now we are done with adding those two cost elements. Now let us go to establishing the amount of capital that is needed to be injected in this. To do that, we go to the cash flow statement here. Here is where we can have a picture of how much capital is needed. First of all, let me click on the top right corner here to select all, and then go to this sheet, format cell size here, and then auto-fit column width, so that we see each and every item. Okay, now you see that cash flow at the end of the period from January up to July is negative. Cash flow at the end of the period. It starts to be positive in August. Okay, so in this period, because we have not modeled any capital yet in this projection, this negative cash flow is reflected as an overdraft. That is what we modeled in balance sheet here. If we go to balance sheet, you will see on the bank overdraft side, we have bank overdraft from January here up to July. From August, we do not have bank overdraft. Okay, so I just wanted to let you know how that negative cash flow has been reflected in our balance sheet. Now, how much do we need to put as capital? That will cover cash flow from financing activities here. So let me double tap here to write capital. How much should we inject so that to remove this negative cash flow? We see the figure start from 3.3 million in January, grows to 10.7 million. In February, grows to 17.7 million. In March, grows to 19.5 million. In April, and then goes down to 18, from 19 to 19.5 to 18.6. So the peak in the negative balance is in April, and that is 19.5. So this means if we inject 20 million, it will clear the let us see here. For example, in January, here is where we start to inject 20 million for this business. I double tap to feed 20. 1 2 3 4 5 6. Because it is injected, it is positive figure, and I need to put a formula here. Total cash flow from financing activities, that will be the summation, and then check to accept that, and then tap to fill this to the end of the projection period. Okay, so we have added the cash flow from financing activities component, but we need to finish the double entry principle for it. So I would go to create a working for this. On working sheet here, I will add an item for capital. So double tap to type capital. Where we'll have opening balance, and then we'll have injections of capital, and here withdrawals of capital, and then closing balance. And so let's put 0 on opening balance, so that when I put a formula here for sum, it sums from there, and this formula is true, so I fail to tap it. Is true throughout the planning horizon, so I drag this till the end, here, and then I put the formula for opening balance, which is equal to closing balance. Opening balance for February is closing balance for January, so I put equal sign here, click on closing balance for January and press enter, and then tap to fill this formula throughout the projection period. And then injections, here we put a formula equal to, and go to our cash flow statement, and we pick January here, so enter. We are in January, that's why I pick for January, and I tap to fill this throughout the projection period. Okay, so we are done with the modeling for this, and as I said, in the cash flow we have injected 20 million here, and if we see cash flow at the end of the period, now after injection, it has all turned out to be positive. We no longer have negative cash flow, negative balance of cash, because 20 million is enough to cover all the negative balances we saw here. If I remove this 20 million I just add clear, we saw that the negative balance keeps on increasing until it peaks on 19 million 552,800. That is the peak, and then it starts to go down until it is extinguished. So I have taken that because the peak is 19.5 million. That's why I said let us put 20 million as capital. Okay, and we, after putting 20 million, let me double tap to put 20. We have seen that we have cleared all the negative cash flow. But to be on the safer side, we can add 5 million on top of 20, so that we have a buffer cash or a buffer capital, just in case things may turn out to be beyond our expected modeling, that will require more cash to support the business before it can sustain itself. So this is a buffer capital injection. So instead of 20 million, we can say 25. So let me replace this with 25. 25 million in the cash. We are in the cash flow sheet here. So here is where I do the adjustments. Okay, now after injecting 25 in the cash, the other double entry is in the capital account. Okay, you debit cash by the cash you inject in the business, and then you credit capital. Okay, so I'm going to, let me slide to the left to get the sheet for balance sheet. I click on the balance sheet here. You see in the check we have a difference, and that is because we have not accounted for capital. And to account for capital, I double tap, put an equal sign, go to workings sheet here, and then in the January side, so you need to pick the closing balance in January here, and then press enter. So after that, I can tap to fill this throughout the projection period. Okay, so after doing that, our balance sheet has balanced. So this is how you establish injection of the capital. You will do that as the final transaction for you to accommodate in the projection, after putting all the projected variables in your financial, and that is going to be final, because you need to establish now what will be the negative cash at the after incorporating all the projected transactions. Okay, but you can see in this projection If we go to P&L sheet, I have not yet accounted for tax. I want to account for tax as the final figure after all other transactions have been accommodated. We still need to do some modeling of the loan. That is the coming lesson. And after modeling the loan, then that is going to be final for this tutorial. And after getting my final numbers, then I will establish the tax. And after establishing the tax, then I will go back and see whether my injected capital is adequate enough to cover the business requirements. Okay, so I will tell you why I put tax at the last one when we reach there. In the meantime, this is the end of this tutorial. Subscribe to my channel so that you get posted of the coming tutorials. I will definitely appreciate if you like my videos, because you know I need to make money out of my knowledge here, and the only way for me to be able to make money is for you to support me through your subscription and the likes of these videos. So do that so that I get enough energy to keep on sharing this unique knowledge that you're not going to get it anywhere else but from me. Thanks guys for listening, for watching this video. Welcome back to other tutorials coming. Bye for now.